This video is all about a little something called premium chasing. Okay, so premium chasing is a bad thing. It's something we don't want to do as options traders, and I'm going to explain how I steer clear of it, why it's bad, all those things. Okay, so basically, premium chasing is greed. Greed is very seductive. It can talk to you in your mind at times as though you're making a really sound decision. That's what greed does. It kind of comes in and talks to you and says, like, hey, it seems like a really good idea to do this because it would make us a lot of money, wouldn't it? And it sounds logical, maybe at the time, or greed tends to downplay the risks. So, what I like to do as a trader is I have a very set system of rules that I follow for picking the stocks that I'm going to trade. So if you guys haven't checked out my series on financial freedom through investing, check that out. It's a series of videos here, and it shows you how I pick a stock to both buy and how I pick a stock to options trade. I only options trade stocks that I would be wanting to hold for the long term. In other words, I expect those stocks to grow. Okay, so I expect them to grow over a 5-10 year period of time. At least a year or two is what I'm expecting out of those stocks. And if they don't grow, I cut ties with them. Okay, so here is some things that I do in my investing for financial freedom videos. I'm gonna run through it real fast. So the stocks have to have a rising 5-year, 1-year, or 3-month chart, and the stock also must be older than 5 years. So it can't be like a newer company because newer companies aren't established. They don't have the following that I need for me to park my money. Like I want to park my money in tried and true. Okay, that's just to protect my money. That's what I do with it, and that's a really good rule of thumb. And the times I haven't done it, I've got burned. So I am not saying this just to say make up rules willy nilly. I've actually had bad experiences, and it boils down to breaking that rule. How I came up with the rule to begin with was I got burned. All right. So excellent 5-year, 1-year, and 3-month chart. Stock has to be more than 5 years old. The second thing is going to be that I go over to Yahoo Finance, and I have a little screen capture of that here. I pasted my information together in one spot for you guys to see it. On Coinbase, which we're going to talk about in a minute. But if you go to the Yahoo Finance website, you can just click on this financials tab that's over on the left, and it will bring up the year-to-year total revenue and gross profit right in front of you. And all of those numbers have to be going up on the total revenue year over year and gross profit for me to want to trade that stock. The last thing that I'm going to do is I'm going to go look at the premiums, options premiums, and what they pay for a 3-week covered call premium. And I'm going to see if that looks like a good number. Okay. And when I say good number, high isn't necessarily the best. That's premium chasing. Okay. So we're going to get into that a little bit more. So I'm going to talk right now about how I feel Coinbase is premium chasing and why I'm steering clear of it. Okay, so the first thing is I'm just going to go to the charts. Okay, the charts are okay on Coinbase. They pass the test as far as being up on the 1-year, 5-year, and 3-month chart. They do, but the stock isn't 5 years old, so therefore I'm not going there. I just want more time for this stock to prove to me that it can do great things, and it has to be around for 5 years before I'm going to do that. Before I'm going to park my money there. I'm just not going to give this company my money because they haven't really had that much time to prove to me that they're on the up and up. And actually, if I look back at the historical news on Coinbase, they haven't always been on the up and up. One of the things that they were doing was trying not to cooperate with US regulators on like who holds accounts and what's in them. Just because they thought they had crypto. So that'd be because they do have crypto. It's not they think they have crypto. They do. Okay, so obviously Coinbase is a crypto trading platform. The other thing that's just kind of like a no-go here is I always have to understand the company. That's the other part of my stock buying system is that I have to understand the company. It needs to be an industry dominator or a monopoly. Coinbase is definitely an industry dominator. There's no question about that, but Coinbase is really tied into crypto. Crypto is very volatile. So that's a little too volatile for my taste because what goes on in crypto affects Coinbase, and that just seems like not something that I want to do. That's up to you guys if you want to do that or not, though. As far as make crypto plays, I would just say I don't, it's none of my business. I'm just saying what I would do. And this doesn't work for me. Okay. The other thing that I'm seeing here is that Coinbase, their earnings and revenue, they are up year over year. So it passes that metrics for me. Like they are making more money as a company, except 2021. Do you guys see this? So this is what I want to bring up to you. So 2021 was a super hot year for crypto. Super, super hot. Like Bitcoin was meeting new all-time highs. It was doing great. Like everybody just thought this thing is on such a tear. It's going to be worth $100,000 tomorrow. Guess what? It took all the way until 2023, the end of 2023, 2 years later, for crypto to go to that Bitcoin specifically, to go to that $100,000 mark that everybody had been promising. That was a Bitcoin maxi. And we're still not back at that number, guys. So Coinbase, look at this. This is not good news. In 2021, Coinbase was doing better as a company than it is in 2023 and 2024. Why? Okay, guys, like, do you see this valley? That's why. That's why that happened. Just because they weren't doing good as a company. And so not only are they less than 5 years old, in the 5 years that they've been around, they haven't been able to produce the same amount of income and profits that they did in 2021. That's not a good sign. That's just plain old not a good sign, okay? So so next thing, if I were interested in trading this stock, and this is the mistake people make, is they go here first. They go to the options chain and they go, oh my gosh, I can buy these shares for $285 per share, plop down $28,500, and then I can get paid like $1,405 to sell a covered call that expires February 14th. That's only 16 days away. That means I get this massive return selling a covered call on this Coinbase stock. There's no way I can go wrong. Yes, there is. There absolutely is a way you can go wrong. I don't know what makes you think, looking at this chart, that Coinbase isn't going to go down again, because it very well could. And if it does, you're going to be stuck with that stock, you're going to be bag holding, and you're going to be like doing covered calls until you're blue in the face trying to recoup some sort of loss. Does it mean that Coinbase won't go up? No, it doesn't mean that. For me, it's just there's too much risk here. I don't like what the financials say. The chart isn't 5 years old yet, and the premiums are uber high. The only thing that's really here for me is high premiums, but that comes at the cost of potentially having my capital at risk and going down. I don't like this play at all. I would say if you are trading Coinbase, in my opinion, you are premium chasing. You are. It's just you're looking at those high premiums and you're going, yeah, I want that. And I'll plump my $28,000 down to get it. And I'm just saying there's greener pastures elsewhere. I've said this again because I've made these types of mistakes in the past. And I don't want to see everyone else go through that. Okay, we're going to go on to another one that I'm hearing people talk about right now a lot, which is e.l.f. So e.l.f. is interesting. So all of these stocks are different. They all have different stories about them. They all have different things going on. Okay, but look at e.l.f.'s chart. It's down. The 1 year chart, I pulled it up right here. It's down. So I mean, it's lost 23% in the last year, and that's not good. There's no reason that I would want to buy shares in this company. None. If it's losing money in a year, why would I want to park my money there? Because I think it's going to retrace. Based on what? It's not an industry dominator. It's in the makeup business. Do you know how? Walk into an Ulta or a Sephora and see how much competition there is out there in the makeup world. Is e.l.f. cheap? Yes. Is it inexpensive to buy? Yes. Could you think that maybe they're going to get so many more customers because it's inexpensive to buy? That would be incorrect. Just saying, like, women will spend any amount of money on any kind of cosmetic that they think is going to make them look prettier because we're super vain and we're like that. All right. So, but again, what people are doing here is they're going straight to the options chain and they're going like, hey, if I sold calls and puts on e.l.f., look how good I would be doing. If I bought shares at 116, right? And I sold a cover call at 120, I'd taken $790. Yeah, you would, but your shares price would be dropping. So you'd be bag holding, okay? Now let's look at the financials on e.l.f. because this is actually really interesting. They are all going up. So this looks good. And this is very annoying. Like if you have been an e.l.f. shareholder for a while and you're seeing that your financials are getting better and better and the company is doing better and better and your share price is going down, I have empathy for you because that sucks. And there's no real reason for it. The only reason is for it is because institutions have decided not to dump money in this stock. They've decided not to trade it. We can't change their minds. If they start seeing a different picture in e.l.f. that they like, they'll start putting money in there. But until then, it's going to be stuck in this range. How will you know when institutions put money back into e.l.f. and they're interested in it? If they ever become so, e.l.f. will go up in share price. The 1-year chart will start looking good. The 5-year chart will start looking good. The 3-month chart will looking good. That is when I would be interested in getting into something like e.l.f. But I'm still not gonna because it's never going to be an industry dominator. So it's out for me. So you can see there's just so many things to consider here. And these two stocks I really do feel like are premium chasing. The just out of the money call on e.l.f. This is so weird. They go up and down here. They shouldn't be like that. I have no idea why that is. But the strike price that's just out of the money on the covered call here is $750 in premium. That's an insane return on the investment of $11,700, which is what it would cost to buy these shares and do a covered call contract on them. But again, I think I've said in another video, whenever you see a high premium, it should say to you, that's high risk. And I'm not saying that because I'm saying that. I'm saying that because the market makers are saying that. The market makers are these people that work with algorithms that set up the options chain pricing on all of these stocks. Where they see a lot of volatility, they raise these premiums up. Where they see a lot of risk, they raise these premiums up. The premium what you're getting paid for in premium is your payment to assume risk. So just remember that. You need to really remember that. All right. So these are two stocks that I really feel like are premium chasing. It is greed taking over people's sense of just doing the right thing and going with better stocks than not. So there's one other point I want to make. Some people might be watching this video and being like, well, I'm going to wheel those stocks. Are you? Okay, let me just explain what would happen if you wheeled this stock. Okay, so the first thing you're going to do, probably if you're a wheeler and you're a fan of that, is you're going to sell a cash secured put. All right, when in the last year would you have sold it? Here? Did you think it couldn't go lower than here? How about here? Did you think it couldn't go lower than here? How about here? Maybe you got lucky that time. But that was risky though. There was no sense in that. So let's say you sold your cash secured put here. Okay, you get assigned. You sold it here. I don't know. Where'd you sell it? Here? You get assigned, but it's really like you're getting assigned here already at like a, I don't know, loss. Then you're selling a covered call. I don't know. When is your call expiring? Is it here? Like there's no way you can win with the wheel on a declining stock. You're still going to end up bag holding.